Stocks rebound on Wall Street following the steep Tuesday sell-off. The tech-heavy Nasdaq jumps over 1%. Chipmaker Nvidia replaces Alphabet as Wall Street's third most valuable company. Treasury yields fall. The US dollar softens. Stocks in the Asia-Pacific open higher, mirroring the rebound on Wall Street. Japan's economy unexpectedly slips into a recession, hurt by weak domestic demand. The gift nifty indicates a positive start for the Indian market. Oil prices come off with Brent trading at around $81 a barrel after a rise in US stockpiles. Bitcoin regains the $1 trillion market cap after prices hit $52,000 apiece, the highest since December of 2021. Sources tell CNBC TV 18 that the RBI has directed card networks like Visa and MasterCard to pause commercial card-based payments. The RBI's concerns are likely to have emerged from payments done via non-KYC merchants. RBI meets heads of public and select private sector banks to highlight issues like liquidity risk management and digital fraud. The governor says there is no scope for complacency and the banks should maintain their vigil around any risk build-up. Good morning in the Mumbai News Center. I'm Sonu Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you, quite a lot of them. But first up, as always, let's take a look at what the global markets and specifically Asian markets are doing. Well, they have seen a rebound now, and there is a positive cue coming in as well in terms of good cues from the US market. So let's take a look at the Asian markets first up, and then we'll talk about the macros. The Taiwanese index and the Hang Seng, both of them will come up for you on the screen, and that is the one which is on our radar. The Taiwanese index is higher in trade right now. Hang Seng, though, we are seeing some profit booking that has come by. That one is down 0.4%. Taiwan is up around 2.6%. We do have the Nikkei, which is sitting with gains of around 0.7%. The Shanghai is up 1.2%. And the gift nifty, that one is indicating that the start for our own markets, well, that could be in the green. And considering the good cues we got from the US markets, it's implying a 66-point uptick. But in a major cue from the region, Japan's economy dipped into a technical recession after unexpectedly contracting in the fourth quarter. The provisional GDP contracted 0.4% in quarter four versus an estimate of 1.4% growth. High inflation crippled domestic demand and private consumption as well. So that is something that you should keep on your radar. It is coming in from the Japanese markets. And in the US market, Wall Street ended Wednesday's trading session higher as the market tried to claw back some of the steep losses from the previous trading session. The Dow closed over 150 points higher. The S&P closed with a near 1% gain, while the tech-heavy Nasdaq composite was the day's outperformer, closing more than 200 points higher. In interesting stock moves, Nvidia surged 2.5%, sending the chipmaker's market capitalization briefly above that of Alphabet's, making it the third most valuable US company. Okay, let's stay with the US markets as investors continue to digest the hotter-than-expected inflation numbers that came through earlier this week. Let's listen to some important voices on what the numbers mean for the US economy and their expectations from the Federal Reserve.
We're not going to get more than 3 cuts this year, and we're probably not going to start this cutting cycle until June. The market had gotten carried away, and yesterday, a relatively small miss in numbers that are very sensitive to seasonal adjustment created this outside-size reaction, and it just shows you the extent to which the market had gotten carried away without much critical thinking about a very soft landing, many cuts, starting early. This was, I think, just a wake-up call to people who got carried away.
We had been looking for a higher number because of what we've called a January effect, big price increases at the start of the year that aren't fully adjusted for by the seasonal factors. We still think that we get a cut in May. There is some risk to it. Clearly, the Fed has been pushing back. Chair Powell pushed back very clearly against expectations for March at the last press conference. And on balance, I would say the Fed speak has generally talked about, it's not quite time yet. It's been mixed. For us, the key is really what happens to inflation. And we still think core PCE inflation, which is what they're most focused on, is on its way back to very close to 2% soon.
Okay, all right. It's only possible by June that there could be a rate cut from the Fed. That's the word coming in from experts. But let's get you the final update in our global market wrap this morning. Positive cues coming in from Europe as well, with the French CAC up 52 points, the German DAX gaining about 65 points, while the British FTSE closed with gains of 56 points. In a relief for policymakers at the Bank of England, inflation in the UK for the month of January was steady at 4% versus expectations of 4.2%. Low food prices helped offset an increase in energy prices that brought the headline figure lower. Meanwhile, the Vice President of European Central Bank said that more data is needed before the ECB can be comfortable that record high rates have done their job. Okay, all right, that is the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that, what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to both of you. Sudarshan, let me come across to you first up. Some positive cues today for our own markets.
Morning, Sonal. So yes, well, the handover from Wall Street is slightly positive. US market has regained half of its losses seen on the previous day. The tech-heavy index Nasdaq, which had lost 2% Tuesday, has gained 1% overnight, and S&P is back above the level of 5,000. For our market, it was a session of two halves. In the first half, when we reacted to US CPI inflation, higher than CPI inflation, all the major indices were down somewhere in the range of 1 to 3%. But in the second half, the focus shifted to domestic cues, where we saw RWPI inflation coming at a 3-month low, and following that, markets staged a smart recovery led by banks, especially PSU banks and Reliance Industries. But there were two sectors which did not take part in the recovery. Those were the sectors which are more dependent on global cues, and those sectors are Nifty, IT and Pharma. Both these sectors were down 1% each, even at the close. For today, it seems we might have a higher start. GIFT Nifty is indicating a start in the green. Coming to institutional activities, it looks like DIIs used the fall seen in the first half to buy, whereas FIs used the recovery seen in the second half to lighten their positions. FIs sold shares worth rupees 4,000 crore, while DIIs have bought of rupees 2,900 crore in cash market on Wednesday. Talking about some stocks that have seen major delivery percentage on Wednesday, the first name is Bharti Airtel, where delivery percentage to traded quantity was at 75%, that is highest in a month. Second name is Marico, where delivery percentage was at 81%, highest in 3 months. And last name is Inox Wind, where delivery percentage is 85%, that is highest in at least a year, or it might be highest since its listing. Lastly, cues to watch, we have India trade data for January, expected around 3 p.m. and US initial jobless claims expected around 7 p.m. India time.
Okay, all right. So those are some of the cues we'll be watching out for. But Sudarshan, there is a long list of stocks as well. Fag end of the earnings season, what do you have on your radar?
We'll start with India Bulls Housing Finance. It was a weak quarter. Disbursements have slipped both sequentially and year-on-year. NII was down 28% year-on-year, down 8% sequentially. NMDC earnings were better than estimates. Margin is 200 bips higher against CNBC TV18 poll. Volumes have increased 19% year-on-year. Glenmark Pharma distribution model change has impacted India numbers. Revenue was down 28%. Reported EBITDA loss of rupees 209 crore. Muthoot Finance, higher gold prices have aided growth. Earnings were better than estimates. NI has increased 12% year-on-year. Sun TV results were largely in line. Revenue has increased 4% year-on-year. Crompton Consumers earnings have come in below estimates. Margin has fallen 100 bips, but revenue is up 12% year-on-year. Gland Pharma revenue has increased 65%. Margin came in line with estimate at 23%. In other earnings, companies which have reported good earnings are Capacity Infra, GSPL, Hinduja Global, Genesis International, and companies which have reported weak earnings are Dishman Carbogen, Alembic. Remember, it's Alembic Real Estate, not Alembic Pharma, and last name is Narayana Health. In other news, we have Utkarsh Small Finance Bank. Company will evaluate reverse merger with holding company Utkarsh Core Invest. Paytm has issued clarification in which CNBC TV18 Newsbreak is confirmed. Company says it has been receiving notices from authorities, including Enforcement Directorate. HUL companies in talks with Andhra Pradesh government to collaborate on palm oil production.
Okay, all right. Those are some of the stocks that will be on our radar. Let me go across to Nigel finally. He's joining in with all the cues from the F&O space. Hey, Nigel, morning.
Morning, Sonal. You know, yesterday it was the day of the Nifty Bank, recovered close to 1,000 points in the low point of the day. And as we mentioned yesterday in this segment itself, that it holding the 200 DMA is very, very important. And then breaking towards that 20 DMA. And that chart tells you the perfect picture. For the last, quite a few times, you look in January as well, multiple times, we tested that 200 EMA and from there we bounced up. So that becomes a line in the sand. And I'll tell you what, in the last 4-5 trading sessions, every day we have breached the 45,000 odd mark, but we have seen buying at around this 44,600, 44,800. Does it have more steam? That holds the key for today's trading session as well. What took place though yesterday? The institutional numbers actually were net sell, as we were telling you earlier. There was a short covering bounce that played out, both on the Nifty as well as the Nifty Bank. Both those two indices ended higher. And on the Nifty Bank, there was a big short covering bounce. But it wasn't the FIs who covered their shorts, because the FIs, they added more longs than short positions. They continue to remain net short with around 64% of their positions on the short side. On the options data, the 21,600 put and the 22,000 call, well, they were very, very active. And that's really been the goalpost. The 21,500 on the downside, on the upside, the 22,000 odd mark. Can we break above this level? I have a fair bit of confidence that the 21,400, 21,500 level will not break. Looking at the options data, looking at the texture of the market as well. But can we break above the 22,000 mark? Two key variables that you need to track. One is Reliance Industries. That's been the big outperformer, and it's been moving very, very well. Yesterday as well, that staged the intraday recovery. And the Nifty Bank, does it have more steam after yesterday's bounce that we saw? Put that together, you have more than 40% of the Nifty that we're talking about. So these two hold the key even for today's trading session. The GIFT 50 suggests a start in the green. Let's see if we can build on from there. But yesterday, it was very, very encouraging to see the kind of bounce we had on the key indices. Back to you.
Okay, all right. Thank you guys for prepping us up for this trading day ahead. We'll slip into a break now. When we come back, sources say the RBI has asked the card networks to pause their commercial card-based payments. More on this when we return. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18, where the Reserve Bank has directed card networks like Visa and MasterCard to pause commercial card-based payments. We learned from sources that the central bank's concerns could have emerged from payments done at merchant outlets who have not properly complied with KYC norms. Ritu Singh is here with more details on this one. Ritu, what are you picking up?
We have been given to understand that the RBI has asked networks like Visa and MasterCard to pause all commercial cards-based payments made by businesses and ensure that all business payment service provider or BPSP transactions, as they are called, are kept in abeyance until further notice. And this move could impact certain fintechs which process such B2B transactions. Now, sources indicate that the regulator's concerns stem from these commercial card-linked transactions being done at merchant or vendor outlets which do not have an explicit authorization from the RBI to accept these card payments and are therefore in violation of the RBI Payments and Settlement Systems Act. To be clear, commercial cards can only be issued by banks according to RBI rules. Typically, you would have corporates using traditional banking channels like net banking to make payments to their vendors, merchants, pay their electricity bills or whatever. But in the last few years, fintechs along with card networks have made these business models like the BPSP model, whereby corporates can use their commercial cards to make payments to vendors and at the same time reap the benefits of rewards, longer repayment cycles, etc., which will not be available when they use traditional channels. And they use fintechs as intermediaries to process these transactions. Now, RBI observed that on certain occasions, these vendors were not authorized to accept card payments and therefore has now taken this action. The volume of payments processed through this channel is relatively small, we've been given to understand, when you compare it to an RTGS or IMPS method, and we understand it's roughly around 4,000 crores on a monthly basis. So as far as the impact is concerned, fintechs like Encash, Paymate, which have business models around this, could be impacted. Visa did confirm the development to us, saying it received a communication from RBI on the 8th of Feb in what appears to be an industry-wide request for information on the role of business payment solution providers in commercial and business payments, and has asked it to keep such transactions in abeyance as of now.
Okay, all right, Ritu, thank you so much for bringing us all those important details. And at a meeting held with the MDs and CEOs of public and private sector banks yesterday, the RBI governor said that there is no scope for any complacency and also asked the banks to maintain their vigil around any build-up of risks in the banking system. The governor complimented banks on the improved financial performance of the whole banking sector as well. He highlighted issues including adherence to co-lending guidelines and the bank's exposure to NBFCs. liquidity, risk management, IT, and cybersecurity preparedness as well. He also addressed the issues around operational resilience, digital frauds, and strengthening of internal rating framework. Additionally, stressed that customer grievance redressal mechanism and protection of customers' interests are of paramount importance. Okay, all right, so we'll keep getting you more updates on this one. For now, we'll slip into another break. Up next, we'll get you the cues from the commodities market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's bring you the latest on Israel-Hamas conflict now. 9 civilians were killed in a barrage of Israeli strikes on villages across southern Lebanon yesterday. Israel said it responded to Hezbollah rockets that killed a soldier. Following this, Israel's government faced calls for tougher action on the country's border with Lebanon. Meanwhile, some Palestinians have decided to flee Rafah as a UN official warned that an Israeli attack on Gaza's southernmost city could lead to a slaughter. The UN also said it will not assist in evacuation if Israel goes ahead with a ground offensive on the city. Okay, all right. With that, let's move on and talk about the commodity markets. Manisha Gupta is joining us with all the update from that space. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. I mean, as you mentioned, that yes, there is Middle East tension that is escalating with Israel striking Lebanon, but the markets do not see any impact on the crude supplies as yet. Actually, when you look at the U.S. crude stocks, they have risen by 12 million barrels in the previous week. The U.S. production also is hitting a record high of 13.3 million barrels per day, and that is what is keeping the prices in check. The metals also have a similar fate today. We've seen copper prices decline to 3-month lows. Zinc is trading at a 1-month lows. Gold prices continue to trade below $2,000 per ounce. That is because the dollar index is trading at around 3-month highs, and the markets do believe that there is, while no chance of a rate cut in the month of March, there is perhaps just a 50% chance of a rate cut in the month of May as well, and that's what's weighing on commodities.
Okay, all right. Thank you, Manisha, for joining us with all the updates from the commodity markets. With that, we'll take your leave on this edition of Power Breakfast, but do stay tuned. Bazaar Morning Call comes up next with all the market action.